All right, I wanted to bring up a couple charts here as we close out this thrashing throttled Thursday. We've basically sold off. It's been a trend day down all day, as we talked about. Wanted to bring up the VIX as we are stepping into buying some VIX calls. Now, I would say that this is leg one of two. I'd probably buy another leg down to the high teens. I'm going to buy some October 20 calls is where we bought them this morning when we were early. When we were trading down to 22 was our low. We traded up to 23 and a half on the VIX. Now I'm going to be buying some calls today, and I bought some. I'll buy some if it goes into the 18 to 20 range over the next week or so. So have your orders in, pick your spots. But I think volatility. I'm betting that volatility is here to stay. It's a low risk bet on this pullback. I like the chart, and I would buy a stock that looked like that anytime. The second thing I wanted to point out was the Dow Cash Index, the industrial index here. And one thing that I pointed out in the chat room today over at daytradeadvisors.com was it looks to me like we're stuck in a range. We're at the lower end of a range that we were basically trading in from May to mid-August before we broke down. And that was basically the 13,240 up to 13,700. And if I could populate this chart here, I would be able to show you this. And it'll take a minute here. Just there's a lot of slowness amongst my trade station today. But the bottom line is we've been stuck basically in this range for 4.5, 5 months, and we're in the lower end of this range now. And I wouldn't be surprised if we stayed within this range. We've broken out. We went as high as 14,100 on the top end, and we broke down and went as high as 12,600 on the bottom end. But those were basically exaggerated moves to either side that haven't been able to hold at this point. So we're back to the lower end of this range, and I would suggest that until that is resolved one way or another, either higher over 13,700 or lower below 12,700, we're going to be maintaining this range-bound situation that we're standing in here in the overall market. The other ideas that I pointed out earlier, again, dollar yen, I do want to sell, but I want that to get a little higher or possibly break down some. So I'm looking for the dollar yen to start legging in on a short at about the 118 area. We're currently trading 116.05. So it did rally to 117 today, but wasn't quite near where I wanted to buy it. The Dow charts that we were talking about earlier is populating here. So let me show this here again real quick. You saw the breakout here basically in early July. We broke out and ran 400 points to a new high over 14,000 on the Dow. We then proceeded to break down, trade around again in this zone. You see the areas I was talking about previously, 240, 13,240, 13,700. We've been locked in that range for almost 5 months now. We're back to the bottom end of that could prove resistance, as this was support at this level. So this could prove to be another turn in the move. However, we're going to have to go and take out this 13,800 on a close for me to be uber bearish. So I would be a seller of rallies up to this 13,700. I would not necessarily be a buyer here, but keep this in mind. I'd be a seller probably below this 12,800, and I'd probably be a buyer if we were to close above 13,700. That is the way that this chart appears to me. And you can kind of see that same thing if you're able to draw a trend line on your Dow chart right here. And again, if you break above that, you'd probably have to tend to be bullish on this side of the trend line. Right now, we're leaning to the bearish. So you could probably, again, sell up to this 350, 500 level. And if you go above this 700 level, it's definitely going to be bearish in my book, or bullish, because you're going to have, again, a lot of support below the market here. Below all these buyers are going to be supporting any higher prices. So we're at a very tenuous time in the market. I don't know which way we're going to go, higher or lower. We're going to let the market tell us, and I think that's the best way to be as a trader, and try to take your biases. Take the mortgage mess, take the subprime mess, keep it in your repertoire, but it's not something you can really trade off on an overall basis. So keep this stuff in mind. Know your levels, set your stops, know your risk, and you'll be able to trade on day after day after day, year after year. So quick analysis there. We'll be back tomorrow again. I'm going to be taking off probably next Thursday, Friday for the long Labor Day weekend. I'll be actually heading to Michigan for 2 weeks after that for some fun, but we still will be trading the weeks of September 8th and 15th. But I will be back in the Midwest for a couple weeks, taking the office mobile at that time. So that's it. Hope everybody's having a great summer Thursday as the paint dries, and we'll be back tomorrow, Friday, for